Hello and welcome to the first English video of Trade on the Market. My name is Thomas and I started the Trade on the Market project 2.5 years ago to share my knowledge in fundamental analysis, technical analysis, economics and macroeconomics data in Hungarian. The project became so successful that a whole team has formed behind me. We finally decided to introduce our 20 years of experience in the stock market to the English-speaking world, covering every segment of it. If you're interested in the service we offer, please visit our website, which you can find in the description below. Although our service mainly started in Hungarian, we're making progress to include English language services. In the meantime, we have a very advanced pro level that offers interactive education and many useful services, and we are constantly improving it. And yes, this is me. In these videos, I primarily introduce important macroeconomic data, but we welcome your opinions and thoughts in the comment section. And now, let's start with the next week's data on Monday. Before we start, I would like to highlight to you that in order to keep the video short, I will not be able to detail every single data, what is really important in an actual day. However, on our Discord server, every single one, whatever you just found in little bubbles on the side. But for now, we are focusing on one specific. Pending home sales is an economic indicator that tracks the number of homes that are under contract for sale but have not yet closed the deal. By the way, this data is a leading indicator of the health of the housing market and will be published at 4 p.m. Oh, please don't forget, every single time slot I will mention in these videos are Central European time, because obviously we are in Central Europe. The index is based on a sample of contracts signed by buyers and sellers with the goal of predicting the future home sales. For example, a higher pending home sales index indicates strong demand for homes, which could lead to higher sales in the near future. Conversely, a lower index may indicate weaker demand and be a sign of a slowing housing market. Moreover, this data should also be considered along with other indexes, making the current data especially important. As we previously had an outstanding rate of 2.5%, a figure immediately after -4% may be surprising at the first glance. We could even say, okay, there is no problem here, the housing market is cracking. However, it is essential to keep in mind the bigger picture and consider the data alongside other indicators. If we look at the past recessions, we notice that after negative data, the market value always jumps up drastically to become positive again. This happened in 2008, for example. Many people invested heavily in the housing market during this time, but then the biggest fall in the market happened only after that. The reason for this is that people start to run out of their savings due to high inflation and interest rates on loans shoot up. During this time, agents try to sell existing homes at lower prices since they see a more difficult period coming. Those who can afford it can buy these houses at a lower price during this period. At the same time, for those who follow us on the pro level, you may know about the US housing starts data. This data shows that the construction of new homes is at extreme low, which confirms what we've noticed before. The agencies are in a rush to sell new homes, but there are not any new constructions coming. This will have a big impact on the cost of the housing as soon as the homes that are for sale run out or when no one wants to buy them anymore. If we look at the data on the short term, the current increase in the data might help the DXY, but when we compare it to other data, it tells us that there may be problems in the housing market. Moving to the next day, which will be much more exciting than Monday, every trader must be very busy. Whatever I highlighted in black, it's a very important data. For example, core CPI from Japan, we start at 6 a.m. Central European time, but at the same time, late afternoon, we will get Canadian GDP and other very important data from the United States. And this is where we start. To back up our previous analysis of the housing market, we will get the US House Price Index at 3 p.m. again, Central European time. It has been decreasing drastically for 5 months, indicating that agents are selling the remaining homes at a very low prices. This data supports our earlier conclusion and may also elicit a reaction from the market. If you are interested in this market, this data could be very important to consider. But here is something else, which is the Chicago PMI. The data that comes at 3:45 p.m. is not usually the most important PMI data, but given the current situation of the DXY, even small changes can be significant in the market. The higher point compared to the previous one is a positive effect on the DXY, but I'm paying attention because the current negative but stagnant data was visible before any serious fall. I'm concerned about the possible negative data and how the market will react, which is likely not a positive way. On the other hand, here is Wednesday. No, not that cute little girl, but Wednesday will be similarly pretty much bloody. There's a lot of data we could talk about, but we will highlight 3 of them from all. And the first one, it's important to keep an eye on Australian GDP data because it can have an impact on the currency's value. A positive result can have a positive effect, while a negative result can have a negative effect. What a surprise. It's important to note that this impact can be on the currency index itself, which is AXY in this case, rather than on a currency pair. When looking at the currency pairs, it's important to consider which currency is dominant. For example, if comparing the Australian dollar to the US dollar would be the dominant currency, and the impact of the Australian GDP may not be noticeable on the chart, unless there is a significant change. However, compared to a less dominant currency like the Romanian currency, even a small change in the Australian GDP can have an impact on the chart, on the currency pair chart. The other very important data we will have a look is the European Union's Final Manufacturing PMI will be released at 10 a.m. This data has been below 50 points for 7 months in a row, meaning that companies are still not optimistic about the manufacturing sector's performance. The data is reported directly by the companies, so it's a reliable source, or not. Although the data has been slowly improving for the past 4 months, it's still not good news since anything below 50 points is technically not positive. The improvement only shows that fewer companies are afraid of bankruptcies, but it does not mean that the industry is performing better. Despite this, inexperienced traders sometimes interpret the data as positive and cause a false surge in the stock market. Certain industries are particularly struggling, such as those supplying basic resources, chemical and plastic industries. On the other hand, the food industry and household goods production are growing slightly due to inflation. However, if interest rates keep increasing, it may become harder to borrow money and the manufacturing sector may decline even more. It is still a long way to go to improve the PMI values, and loan decreases may counteract any improvements. Therefore, the PMI values may not have a permanent positive effect on the EXY. And here is another one, which is one of my favorite for this day. Although not the most important piece of data, it is still interesting to take a look at the world's total vehicle sales, which tells us how many cars and trucks were sold. It is a good indicator of consumer confidence because when people buy higher value items, it means they have some savings. However, we can see from the credit card debt data that people are spending money that they don't really have. Or even if they have, there is no backup of it. If more vehicles are sold, it means more spending. But this is not sustainable because there is not enough money to support it, especially with increased unemployment data. Car manufacturers have started to lower their prices following Tesla's example, and as a result, 15.7 million vehicles were sold. This is higher than the average 14.7 million vehicles sold since 2020. But it is not yet a trend. Instead, it may indicate that there could be problems with loan repayments in the future. If interest rates don't go down, wages don't increase, and inflation remains high, then every car sold could be a sign of really, really big trouble. This is especially true if unemployment rates continue to rise. And now take a look at Thursday, what's going to happen. Thursday is always a very interesting day, but first of all, we can take a look at what's going to happen in the European Union. The European Union will release important macro data about the combined unemployment rate at 11 a.m. At first glance, we might think that it's not a big deal since we've been seeing a downward trend in unemployment for a while now. But the situation is more complicated than that. In 2020, the pandemic hit the global economy and we saw a shock in the employment market. While unemployment didn't increase drastically, it was a shock in a low inflation environment. Then inflation started to increase due to damage to the supply chain, leading to a record high inflation. In this current situation, even a small increase in the unemployment could lead to a recession or a depression, which could negatively impact the stock market and the bond market. The January data for the European Union showed a final result of 6.6% up from 6.5%, which is enough to cause concern. Therefore, it's important to keep an eye on the unemployment data for the US, UK, and EU, as it could start a domino effect that could be critical to the economy. And here is the other one right next to it, which is at 11 a.m. We got two important estimates, the CPI and the core CPI. The estimates are coming out 2 weeks prior to the final. The flash version is the first we get, and it's the one that has biggest impact on the stock market. The plain CPI is going down, which means that products are getting cheaper, or at least on paper, as we see. But the core CPI is staying the same, which means that the prices of basic goods and services are not changing much, which is also, again, only on paper. These estimates are just predictions, and they can be influenced by what we want to happen rather than what is actually happening. We expect prices to keep going down, as the data shows, or stay the same, but if they start going up, it could have a negative effect on everything except the currency. So it's really important for us to pay attention to these estimates. If you're not sure what the difference between the CPI and the core CPI, feel free to ask me on the Discord server and I'll be happy to explain to you. Of course, there will be more data coming out and we will talk about on the Discord server, such as US unemployment claims, which is very important, and natural gas storage. And we all know what's going on with the natural gas nowadays. So yeah, we definitely need to talk about. But before we do that, Friday is the next one. Now, we're going to take two of the data from Friday. First, which is important for the Europeans, comes from the services sector. I recently talked to the pro level members on Discord server about the European Flash Services PMI, which showed a surprising figure of 53 points. I need to look into the background of this data closely. The Final Services PMI, which is coming out on Friday at 10 a.m., is in the same position. If the data improves a little here, the power of DXY is stronger than the currency's power to react positively, the EXY. However, for the DEX, which is the German 40, this was a good uptrend for some time. The question on the minds of European investors is whether the Services PMI data above 50 points will remain permanently or not. If the data remains persistently positive, it could shake investors' confidence. Yes, exactly, as the European Central Bank, or the ECB, might adopt a stricter tone to reduce the CPI for fighting inflation. And we all know what that means. This could also impact interest rate hikes and may go higher. So investors will not be happy with higher interest rates for a long time. At 3:45 p.m., the Final Services PMI will be released, which is the measure of the health of the service sector in the United States. The latest value of 50.5, like the previous released European data, raises questions and concerns for the Fed. We are curious to see if the data can stay above 50.0 point value. If so, it could send a negative message to the Fed about possible CPI increases, which could lead to aggressive Fed action. In the United States, larger banks are also expressing concerns about the high interest rate environment, and I think this is why the bond market could see interesting activity from the banks. By the way, if you want to know a little bit more about our thoughts, how the next interest rate hike's gonna be or supposed to be, you can just visit us on the website, and in the pro server, we are used to talk about a lot. So if you have a look what's going to happen, housing market sending us signs, very serious signs, that the last breath is just about to happen now, while DXY is strengthening, and this could have a little bit negative impact on technically everything we are trading against. The stock market is awakening, while the crypto market is the one who needs an answer. Of course, when DXY goes up, crypto usually goes down. That's okay. But nowadays we experience some money flowing into the crypto market, and technically this is the first really large recession the crypto market will face off. So we do not know how it's going to end up. Of course, we are cheering for it. I hope the information was useful for you. Remember, at the pro level, we analyze every major macro data and draw the appropriate conclusion when they arrive. If you want to join, visit our website, link in the description, and see what the pro level English language services offers. In the meantime, I would love to hear your thoughts and opinions in the comment section. If you want to stay informed about next week's data and other useful information, subscribe and turn on all notifications. And if you enjoyed the video, please give us a thumbs up so it can reach more people. Until the next video, good luck in the market and see you later.